In the past trading session, banking contagion spread to Europe, with Deutsche Bank stocks falling. Deutsche Bank's credit default swaps spiked to levels not seen since 2020. What is a credit default swap? It's basically an insurance contract against losses caused from default. You can see with Deutsche Bank, those costs of insurance, the cost of default or the probability of default is just going up exponentially. Meanwhile, in the US, Yellen says US regulators say banking system is sound and resilient, but we know from yesterday's episode this is not the case at all. As traders, we follow the footprint of the markets, and the footprints in the banking sector are looking very unhealthy. You can see Citigroup is literally imploding on itself, and if we go back to the 2020 sell-off, we're seeing similar price behavior. If we look at the top European banks, what I've done is put Deutsche Bank in yellow so you can see it more clearly. You can see Deutsche Bank is falling off a cliff. In LV28 inside the Masterclass, I provided this chart predicting local highs and local lows. What we've seen recently is inverse credit risk, this white line, falling through a level of support. This is very ugly. We saw this in the past with the 2020 sell-off. What actually followed was not good news. One thing to bear in mind, it's not all doom and gloom. We're actually relying on the S&P 500 right now. When looking at the S&P 500, it doesn't make a lot of sense when looking at it like this. We don't know where the strong support and strong resistance is inside the market. For example, is the S&P 500 at support, or is it getting rejected from resistance? From this kind of chart, you will not know. With the CTKS method, we understand where smart money is buying and selling. And I've mentioned for quite a while that the smart money buy levels between 38.78 and 39.39 are exceptionally strong. The S&P 500 is propping up the entire US financial market. This is despite what's happening inside the banking sector. This is very, very fortunate for the banks that the S&P 500 is sitting on rock solid support. If you don't know the CTKS method, you do not know that the S&P 500 is sitting on rock solid support at the present time. And when we look at the S&P 500, what it actually did, it came down, tested those buyers, and then rallied up. It's trying to get over this level of once resistance and turn it to support. It's very early days, but it's certainly a positive move. The CTKS leading risk indicator has not collapsed down just yet. This shows a lot of strength in financial markets. One thing that we do note, Bitcoin follows the stock market's gravity. As it travels 24 hours a day, 7 days a week, much like our community, we can use it to understand price momentum in the S&P 500. What is this white line? That's the S&P 500. Does Bitcoin, or is Bitcoin currently following the S&P 500? On average it is. We note this uptick in the S&P 500. What was that about? You know already. That was the bounce from very, very strong steel-like support. If that support actually gets cracked, we're in for some really roller coaster action. But so far it's holding. And what we do as traders, we look at what is actually happening inside the markets. You do not get that from news headlines. You get that by looking at the charts. But of course you need the news to understand the context. We almost broke above this smart money sell level from 27,843 to 28,380. Just around here, we were almost getting above it. Then the market sold down. Thank you, Deutsche Bank. Bitcoin is a leading indicator of risk on or risk off inside the S&P 500. It's really good to keep this in mind. With this in mind, there is a potential recovery across the weekend. But we have to understand that Bitcoin is below, currently at 27,448. It's currently below a smart money sell level, and there's a smart money buy level between 26,621 to 26,697, and a lower one around the 25,776 mark. A lot of people don't like crypto because the regulators are just pursuing crypto with abandon. Crypto faces legal reckoning as the SEC prepares action against Coinbase. What is all this action for? It's paving the way. Paving the way for what organizations? Could it be the NASDAQ? The NASDAQ eyes crypto custody launch by end of the second quarter, as it joins a growing pool of traditional finance firms that could fill the role of the crypto middlemen following a spate of bankruptcies in the industry. Well, that just means crypto is safe. It's just in the wrong hands. It isn't in the hands of the banks, and we know how good the banks are. The banks are very, very safe places, and they've got so much regulation on them. There can't be a bank run. Oh, hang on a second. There was recently. Silicon Valley Bank. There's a lot of news that the banks are stopping off-ramps and on-ramps as far as crypto is concerned. Why are they doing this? They don't want money to leave the banking system and go to crypto. It's a competitive environment. The banks are shutting the doors. Why is that? Because they need the money. If depositors come knocking, because of a fractional reserve system, banks loan out 90% of what they're given by depositors, and they keep on loaning it out. We covered this in a previous episode. When depositors come back looking for their money, guess what? It doesn't exist. It's been loaned out through what's called a credit multiplier. The credit multiplier, or monetary multiplier, is how money is created in the economic system through credit creation via the fractional reserve banking system. We talk a lot about the bond market and the equity market, bonds versus stocks. Bonds are essentially a loan. They're a loan to get interest. Stocks are a share of ownership, and they may come with dividends as well. When we talk about the bond market and the equities market, they're two different markets. When we say there's a flight to safety in the bond market, where is that flight to safety coming from? It's coming from the equities market and also the DXY, and also potentially precious metals. Often precious metals and bonds will move in the same direction, but not all the time. What we've seen in the past trading session was a flight to safety into the bond market. Bonds are seen as very, very safe by investors. Credit Suisse actually wiped out $17.5 billion worth of AT1 bonds recently. When I mean wiped out, it wrote the value down to zero. That caused panic waves across the banking system. These AT1 bonds were actually convertible into equity. That means if there was a problem, those bonds could be converted into shares. But that didn't happen. They were driven down to a price of $0. We can see not all bonds are created equal. Government bonds are deemed the safest bonds. That's where the flight to safety is occurring. When bond prices go up, yields go down. And that's what we actually see here. What we also see is the DXY is starting to find a level of support, and we're going to drill into the DXY momentarily. That's placing pressure on gold. The VIX has still not spiked. The VIX is artificially being suppressed by central bank and government actions. But that's not going to continue indefinitely. The Fed sees a looming credit crunch. Bank credit growth is already slowing, and you can see that just here. Consumer credit and commercial credit is starting to make a bit of a downtrend. Why is that? Because the Fed is raising interest rates. It's becoming unaffordable. When banks can't get the money that they require, they turn to the Fed's discount window, which has long been dubbed a lender of last resort. What has been happening with the discount window just recently? You can see it. It's almost like the GFC, but it's worse. There's a lot to be aware of in terms of what's happening under or inside the engine of financial markets globally. The government always comes out at these crisis moments and says, everything is fine, don't panic. That's why we need to watch the charts. It's really hard to believe that the government wouldn't tell us the truth, because the government thinks we can't handle the truth. So instead, we look at the charts and we see the truth unfolding inside financial markets. The regulators always say that the banking industry is safe. That's why when the banking industry takes over crypto, because it's just not safe, because their banks don't have crypto. But it's well known that the banks are not the cleanest financial participants. Credit Suisse, UBS, amongst banks in Department of Justice, Russia sanctions probe. Bitcoin provides an alternative to the banking system. So the regulators are scrambling to bring Bitcoin and crypto within the bank's jurisdiction. Once they actually do that, you'll find that they say crypto is perfectly safe. Currently, we've been seeing a strong association between Bitcoin and the S&P 500. When we turn to the longs and the shorts in Bitcoin, we can see the longs are coming out. There's a lack of confidence underpinning Bitcoin's price momentum, and the shorts are coming in. But when one position gets overweighted, it frequently turns into a liquidation. We so far haven't seen a spike in the shorts. In the past 24 hours, there's been 147.89 million in total liquidations across 44,695 positions. And when we look at total liquidations across the past 24 hours, about 75% has been long. What about the past 12 hours? Still about 75% long. Past 4 hours, increasing, nearly 88% long. And the past 1 hour, it's inverted, 88% short. The longs and the shorts are always taking turns in liquidating each other. So when we look down to the longs and the shorts, we can see more longs than shorts were liquidated. And we've got a bit of a curling over of, or a bit of a sell arc in terms of Bitcoin's price right now. If the support on the S&P 500 doesn't hold, we're going to see Bitcoin come down, and Bitcoin can give us an indication of the S&P opening direction on Monday. This is why it's so important to look at what Bitcoin is doing. It trades 24 hours a day, 7 days a week. It never ever sleeps. Another very good place to look when trying to understand where the stock markets are going, and it's really important to get their directional momentum, is to look at gold. When you look at gold just on a naked chart, it doesn't make too much sense. Where is the strong support? Where is the strong resistance? You just can't tell. This means it's easy to buy and sell at the wrong times. Because of the instability within the financial system, within the banking system, a lot of people are putting their money in gold. Gold is currently trading at 1977. When people take their money out of the financial system and buy gold, that's called a flight to safety. Gold has been clearly showing that there are major risks in the financial system. But where are the support and where are the resistance levels? Where is the smart money coming in to buy and coming in to sell? Gold, you can't see that from this chart. You need the CTKS method. When gold was doing its meteoric rise, we said there's a lot of resistance overhead with gold. We would expect a retrace. This is actually what occurs when you get a lot of resistance inside the market. Price tends to have to pull back. If it breaks below a key level, it's going to ping pong between stronger support levels. The inverted S&P 500 is giving a relatively good signal on the potential progression of gold. And what do we see now? The inverse S&P 500 is showing that it's probable for gold to make a downward play. As traders, we're always stacking probabilities. Any edge that we can get inside the market can make us a huge amount of money. And it can save us from pretty catastrophic losses as well. That's why traders are very, very quick, very agile, very fast. To a trader, timing is everything. One thing that we can note, as the inverted or inverse S&P 500 came down, it broke this resistance here. It started to rally. That could be a very good forward signal for you. If you're a gold investor and trader, and who doesn't love gold? Gold is absolutely awesome. You can be in Bitcoin and you can be in gold. Don't think in terms of polarized viewpoints. Don't reflect the ignorance that's out there. Some people say it can only be Bitcoin or it can only be gold. Why can't it be both? We live as a society in a scarcity mindset, but as a community, we live in an abundance mindset. You can have both. You can have everything you want in truth. I would like to do a call out to a very, very special global family, our global family. The comments yesterday were just sensational. Right at the end of a near 40-minute video, I just said, if you're with me right now, if you're with Kate and I right now, just say positive excellence in the comment. And we had an overwhelming number of comments. It's just beautiful to see. We've got such a magnificent community, and I appreciate, and Kate and I appreciate each and every one of you. Thank you for sharing this time together. We will always seek to keep you updated and give you an edge inside the markets, a balanced edge. We know that no alt can escape Bitcoin's gravity, and we can see Bitcoin in the last 24 hours has come down 3.36%. The crypto market, in terms of the top 100 gainers in the past 24 hours, is not measuring many. Flare, FLR up the most, up 13%, followed by XMR, then Leo, then it becomes pretty scattered. The greatest losers in the past 24 hours, Stacks, STX, Conflux, CFX, Arbitrum, ARB, Render, Optimism, IMX, LDO, and DYDX. The X's are definitely the biggest losers. And of course, why wouldn't they be? Enhancing your pattern recognition is incredibly important in crypto. We can see Bitcoin's gravity, that blue line, Bitcoin's gravity on Ethereum. We can see as Bitcoin came down, what did Ethereum do? It came down. As Bitcoin came down, what did BNB do? It came down. As Bitcoin came down, what did XRP do? It came down. As ADA came down, what did ADA do? It came down. And the same thing with Doge. And we notice Doge and Matic have swapped positions. Even though they're swapped positions, it's still the same thing. Matic is coming down. This is one thing that you want to be aware of. When Bitcoin has negative price momentum, the alts have a very, very high probability of following that momentum. For the next top 8 cryptos, let's have a look at the association with Bitcoin's gravity and that specific alt. Doge, we can see it already. What are we seeing with BUSD? Well, that's a stable coin, so we don't worry about it. Solana coming down. DOT coming down. What are we seeing in Litecoin? Litecoin can get very, very light when Bitcoin is doing its first retracement. Then it tends to come into alignment and then get lighter again. Keeping your eye on Litecoin is a really, really good idea. And we saw yesterday that Litecoin was coming into this very, very steep selling resistance, and it rejected that. So just keep your eye on Litecoin. I think it's a good one to have a look at. And I was mentioning Matic also the day before, and we can see Matic took out Doge. I hope they had a good date. Let's have a look at SHIB. It's coming down, but it's coming down less than Bitcoin's gravity at the moment. That could foretell a good thing. And look at Tron. When the SEC grabbed Justin Sun and said, we're going to put you in prison for fraud, Tron got absolutely smashed, but since recovered. And now it's just moving in alignment. We've seen this time and time again. When BNB came under the scrutiny of the SEC, And of course, it's going to come under scrutiny. Every single crypto project will come under the scrutiny of the SEC until the banks own crypto. We can see that Tron is now aligning with Bitcoin's gravity. What about AVAX? You can see it again. It's just aligning. So this is a very, very helpful thing. I wish the stock market was this easy. The stock market is so much more complex than crypto. Crypto is relatively simple compared to the stock market. But if you only look at crypto, you don't know what is happening and why. You must look at the stock market. Before university, my focus of studying at school was maths and sciences, physics and chemistry and all that fun kind of stuff. So I take a very scientific perspective when I look at financial price action. I went on to study finance for my university degree, for my undergrad degree. One thing that always interested me, why does price action stop at specific areas? And why does it reverse as well? Why does it reverse, for example, with ADA? Why did ADA reverse down here? Reverse, 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 reverse. You get the idea. Answering that question has been the central focus of my more than 30 years inside financial markets. To answer it, I created the CTKS method. There's a very scientific and structured way that we mark up our charts with the CTKS method. You can see that there was support down here. ADA came down to its support and then just got attracted to the next area of sell. Came down to support, but there was positive air in here. What does that actually mean? The buyers were so strong that they didn't permit the sellers to push it all the way down into this buy area. And what about this? A lot of technical analysts would talk about higher lows and lower highs and higher lows and all sorts of things. But it's very, very straightforward. If this is a low and this is a low, this is definitely higher than that one. Is that higher than that low? Yeah, it is. Is this one higher than that one? Yep, it sure is. So you've got a bit of a trend here emerging, a trend of higher lows. That gives you an idea of upward price momentum. And then where did ADA stop? It stopped within this 377 to 384 mark, and it's currently 360, which means 36 cents. As a professional, you always want to use exact precision. Think of yourself as a scientist of the financial markets. The next major resistance on ADA is 439 to 465. As we're entering the weekend, we know that the main markets are not going to have any direction. But we've seen a couple of bank bailouts on the weekend, so just keep your eye on the press. When we look at XRP's price action, this chart looks very, very similar to what other chart? Please let me know in the comments. It looks really similar to it, and we studied it today. When XRP was just absolutely taking off, the retail crowd was piling in on XRP, saying XRP is going to go to the moon. What we actually knew as scientists, we look at market structure, objective dynamic market structure, to find out where the actual support and actual resistances are inside a market. By revealing the CTKS method, support and resistance levels, these are smart money levels where smart money steps in to buy and to sell. We can see that XRP just rallied very, very strongly, but there was just too much resistance. The sellers became overweighted at this time and pushed the price down. This was a very key structural level inside XRP's structure, from 4344 or 4344 to 4438. We can see XRP is currently 4245. When XRP starts to break above resistance, and it's getting there in the short term, we may get a retest of this 4344 to 4438 mark. Just be aware of the negative potential momentum inside markets. People are really reeling from the banking crisis as it unfolds. All the central banks have said, hey, don't worry, it's contained. We've got it all worked out. but the charts don't say that. They say something completely different, and we're seeing the news headlines break out with more bank failures. I'd like to share a comment from Tales from the Man Cave from yesterday's video. Tales said, "Personally, I look at the stock market more than crypto because it signals what crypto will do. In return, we anticipate turmoil in the main markets. Bitcoin can front-run sentiment. It is all interconnected. I tend to think of markets a bit like a swarm of fish in a huge ocean. Each individual fish reacts to the movements of its neighbors, and the whole swarm moves in one direction on average. Once in a while, a fish gets scared by a shark swimming by or even getting picked off one by one. That creates a disturbance, but before long everybody is synchronized back to the main direction." It's so true, Tales. We do see that in nature all the time. And what a beautiful way of explaining financial markets. As a community, we focus on positive excellence. And to all the people yesterday, and there were many, many more people who didn't have their little thing cut out and put on that particular slide that I did, I just want to thank you from the bottom of my heart and the bottom of Kate's heart. Sharing this time together is so significant for us. We're here each and every day, 7 days a week, with no breaks to help you to see what's going on inside financial markets. Thank you again to everybody who commented, and of course everybody who watched. We have an incredibly strong global family. As professionals, we always do our daily 3-dimensional risk management code. We can do it in public or we can do it in private, but it's very important to do it. This is all about the fact that we control the trade or investment, but it's the market that controls the return. Your return is always based on your active learning, your knowledge, and your courage. The market always penalizes blame, gambling, and a lack of knowledge. The market simply exists to transfer money from the desynchronized to the synchronized. If you are actually making profit, you are synchronized. If you're making losses, you become desynchronized. If you become desynchronized, please scale down. If you're synchronized, please scale up. There is still time to be considered for the Someone You Know CTKS Partial Masterclass Scholarship. The link is in the description of this video. As professional traders, we have to keep a very, very positive attitude. It's easy to get swept away by negativity, but negativity and profitability are inverted on each other. The more negative you are, the harder it is to be profitable. But a lot of people say, "Ken, there's so much negative news out there. How can't I be negative?" And that's a very, very fair point. The key is to swap negativity for courage and learning. When people get negative, they just don't want to make a mistake. Professional traders don't view mistakes as mistakes. There are no mistakes when you trade. There's only learning opportunities. And it's a really beautiful thing to parallel that into life as well. If you've made mistakes in your past, and who hasn't? If you have, they're just learning opportunities. The chance to begin again, the chance to do it better next time. We're not given a manual on how to live. And unfortunately, the system out there doesn't teach us how to learn. It may teach us how to learn economics and mathematics and physics and chemistry and accounting and programming and all of those kind of things. But when it comes to self-learning, it's really, really bad at actually teaching us how to deal with problems. In fact, it's so bad that people have to go outside the system to learn about self-development. That's a really, really poor breakdown in the system. Tell me what you think about that. Have systems changed in between the time that I was at school many, many years ago? Are students, are young ones actually coming up with a knowledge of how to solve problems, of how to go through personal growth, of how to get from zone 1 and zone 2, the panic and the blame zone, into zone 3 and zone 4? Is that happening now, or is it not happening now? Please let me know. I'd be really, really fascinated. One thing that we know, better habits create a better life. All results come from the mind, and all results typically come from habits. If you have a habit of courage, you will act courageously. You just have to get the habit. In market conditions like this, the best thing that you can do is just to start small and scale with BORSOG. What is BORSOG? Buying on red, selling on green. This is a courageous act done by courageous people. It literally rewires your mind to see negative red days as actually a positive. You're getting on the right side of the percentage, but you're being intelligent and you're applying your knowledge. I think a good thing to talk about in the comments as well is just the power of habits. What habits have you found particularly helpful to you? I love sharing these things with our broader community, our global family, because if it helps one person, we've done a good thing. And that's what we're focused on as a community. We're about more than money. Have a fantastic weekend ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.